Afternoon, everybody. Welcome to the TraderMerlin show. A day that I just did not see this coming. I saw yesterday as this giant engulfing pattern. Thought we were going to have a nice follow-through down day. And then, of course, you get a 5-for-1 split from Tesla. And all of a sudden, all hell breaks loose and we start ripping right towards all-time highs. So maybe Trump was right. We are having great up moves in the markets. Anyway, we're going to talk about a lot of different stuff today, but with a primary focus on the greenback. Yes, the U.S. dollar will be the focus of today's show. Hello, everybody out there. Koja Trader, Terry, Gayer, Tomasina. I see Jeff, Ivzy, Frankie Shops, and Jorge as well. So hello, my regulars out there. Our guest to the show today, no stranger to the program. He's been on quite a few times. I think he'll just become a regular fixture on the program. We're going to talk about the power of the U.S. dollar with Mr. Sam Evans. Sam, how you doing?
I'm good, Merlin. I am like a regular fixture. It sounds like great, and it also sounds like, you know, something that just sits in the corner and as well. So we'll see how that new moniker.
You won't be you're not like Ed McMahon. I don't want you to just sit there every 30 seconds and go, ha ha ha, yes. No.
It's all good. It's all good. No, it's all good. So yeah, good to be here, man. Good to be here. I mean, God, what a day on Tesla, huh? I mean, I think that rumors out of Russia about vaccines, Republicans and Democrats kind of now at this spot where they're almost agreeing on a new stimulus bill.
Almost.
I mean, crazy day. But didn't see it, and I think a lot of it was driven by Tesla. I really do, Merlin, because you didn't see it in the Russell. In the trade room today, we mainly focused on the Russell and the NASDAQ, and you didn't see the same level of strength in the Russell. So it was definitely, I think, more of a Tesla-driven event. And you know, novices driving it up. I think everyone getting excited and buying it. But I think it's going to really help on the options chain because we look at a lot of options on Tesla. So I think it's going to maybe figure things out. But it's been getting crazy on that options chain in Tesla the last few months as well. So I'm excited about it. I really am. Yeah,
it's here's the chart of Tesla, guys. And you notice on the left-hand side, that's that spike that you see was as they came out with the announcement after hours yesterday. And, you know, that was obviously a pretty significant move, but it just kept on running today. It was almost straight up, except for the last hour, sold off a little bit. Right now, you're at 1555 on Tesla, showing a gain of 13% on the day. So I'm sure Elon Musk is enjoying his gains out there in the last 24 hours. Pretty and he knows this going in. One second. Let me really quickly look at something here. I'm a big fan of insider trading, meaning I see people do it all of the time. And I'm just kind of curious what we saw right before that announcement. Was there an abnormal spike in volume? Not really a big spike. Usually, you know, when you see those types of things, there's a huge spike of volume. Although you notice the morning, yesterday morning, there was a very high, much higher than normal volume spike, which could have been them knowing that they're going to make that announcement. Because let's be honest, Sam, you know that it's not like they close the market and they just sitting around the coffee maker going, you know, guys, hey, let's do a 5-to-1 split tomorrow, should we? Okay, let's just do it. They've had lawyers up the wazoo. This has been talked about for weeks. It just finally leaked out. So somebody bought shares. I know it.
Absolutely, and it's always the way. I mean, it always goes back to, what was it, May, when he made that whole crazy statement.
Oh, yeah, overvalued.
Yeah, I mean, it's games and games and more games. I mean, I think the only thing that I think is the most truthful statement I can make about the markets is there's games.
Yep, absolutely.
I mean, that's about it. But, you know, at the end of the day, I mean, good luck to the shareholders. It's all good. But, I mean, at the end of the day, it's just more hot air. But, look, I've said this, like, you know, one little piece of good news, the market rallies. Right. You know, anything. It's like, you know, it's just lipstick on a pig. We've said it before. Keep the good little bits of news coming, and the more good news will keep propping it up. And we haven't seen anything crazy. So, I mean, I don't know. I'm still been trying to find the pullback. Today was frustrating, though, Merlin. It was tough on that NASDAQ. Like on the NASDAQ futures we were looking at, really hard to get long on that thing, You know, it just never gave a pullback, and you were buying breakouts, and it was whippy. And so, you know, it was one of those days. But, hey, that's it, you know.
It happened. I'll tell you, I had one of those days where it's really frustrating. I was trading Western Digital today, and actually I had a position for the last couple of days on it. And I had a stop loss, and it literally came down. I saw the prints come across. It took me out. There was like 1,000 shares traded at this one price, which was my stop loss, and it just started to move up from there. You're like, why? Like, literally, hey, did we just take Merlin's stop out? We did? Okay, take her back up.
And it does feel sometimes like you're the only person in the world who's getting that. But, I mean, I've always said, like, you can be the world's – this is the way I deal with it. You can be the world's best driver, right? You can be the greatest driver in the world. But – someone can still cut you up, right? You can be minding your own business, doing everything right. Someone cuts you up. Yep. And that's the way I look at that sometimes. Yeah. I mean, I'm generous on stop losses.
I was a little tired than I needed to be, but, you know, it's all right.
You know, it is what it is. And I think it's the days where you take that personally and then you chase it, then it goes wrong. I've always said, I think the easiest days take care of themselves, don't they? And it's always the rough days that you have the trouble. So, if you don't like it, don't play the game. That's what I say.
It's all part of this wonderful game that we play on a daily basis. Let's go and change topics here. I'm actually thumbing through a little bit of cash here because I thought, since the topic today is the U.S. dollar, we got to make a mockery of the financial industry because they love doing this stuff. Guys, today we're talking about money. Look at all the money we made. Oh, I got so much money. Yeah, those are real hunters, by the way. I want to talk about the U.S. dollar. That was the topic that was brought in. And it was really spurred from a question from Alan and wondering the power of the U.S. dollar. And I know that all my trader friends are always using the dollar as a guide, maybe as an odds enhancer, but certainly it does have a tremendous amount of power. The question that came through from Alan was this. How does the dollar impact your trade? So I figured, I know that you had mentioned that you were talking about it in your trading room, and I thought it might be interesting what you can share with us on how you utilize that dollar, why it's so impactful, and kind of why it has so much power.
Yeah, I mean, listen, it goes back to, look, we can get into a little history kind of lesson on this, but it all goes back to like after the Second World War. It goes back to the Bretton Woods Agreement, the gold standard, and whatever you want to say, this was the economy when coming out of the Second World War. And, do you remember when it was $35 an ounce of gold, right? I think that's what it was off the top of my head, if I remember. That was the pegging. And then the whole kind of gold standard system was built off of that. And, became very quickly known the US dollar as the primary reserve, currency of the world. And it's still got that status. There was talk back 10 years ago that it was going to be the euro, and then obviously we know what happened there, and things are still changing. Now there's the world of crypto, but today, whatever you want to say, it still is the primary currency. It's still heavily backed government bonds, US bonds. Look, all you got to do is look at yields and look at the demand for bonds that over the yield has just pushed that 30-year bubble now, basically, in bond prices, which has pushed yields down. And the more demand for treasuries, the more demand for US bonds, we're going to push the price of the dollar up in the long run. And it has had, it's had its ups and its downs, but it's always been a strong currency. And, still, this whole world of like fiat money printing it off. Yeah. While I know it's being devalued, while I know, it's they're just printing money off the finance debt. Let's be honest, every nation's doing the same thing. And I've always said, it's kind of the rough diamond really of all of the other currencies. And with that in mind, and we could like go deep and fundamental with it, but with that in mind, Merlin, it helps a lot in our trading and investing. One of the things we've been looking at a lot is the currency market. Yep. And in the trade room, we've been looking at a lot of Forex, and it's been quiet. I don't know about you. I've been finding the Forex market pretty dull this last 2 weeks. The Forex market's like one of those things, you wait for it, nothing happens, then bam, it all goes. And that's why I like to kind of use it more like in a portfolio. I like to do longer term stuff on it. But one of the big things that we've been doing, but we do in all our routines, we always just say, look, where is the dollar right now? It's like the easy start for your analysis. If the dollar's weak, it's going to give you a really good idea of what to do in other currencies. If the dollar's strong, it's going to give you other trade theses as well. So, basically everything we've been planning around is by using the dollar. And, the dollar index itself, for me, we talk, hey, do you remember like a couple of weeks ago when Daniel was on the show with me, we were talking about, hey, if you're not in line with the S&P, if you're not in line with the NASDAQ, the broad market, the stock trading is going to suffer. It's the same thing to a lesser degree, but the dollar itself can be a great index, if you like, and there is the dollar index that we can use to help us, stack the odds a little bit more in our favor with our currencies. And that's one of the things we've been looking at today. We looked at the dollar a lot over in the show. If we pull some charts up, it should give us a bit of an idea, Merlin.
Sure. Let me, real quick for the viewers out at home, run through a couple of these charts, because as Sam mentioned, there are some decent moves. Really, the Japanese yen, surprisingly, has been the best moving one. Here's the daily, and I'll just run through some of the majors. Here's the USD, Swiss franc, and you can see that for the last week and a half, it hasn't done much, but it had before that had some phenomenal sell-offs. GBPUSD, so your British pound, same thing. The last week and a half is just blah. And it's really the same thing for most of these currency pairs out there. The one that I did like was USD JPY. It's had a nice 4-day run. It's been a really nice run. Of course, you're coming right to that 107 handle and nice little supply area there. So most of them aren't moving that significantly. But the reason I brought these currencies up, as Jerry says, the Dixie's my favorite indicator. Look, I put this chart together for those that might not understand it. I know that Alan wanted to know more about it. Basically, think of it like an index, right? You got the S&P 500, you have 500 plus companies. The Dow is 30, NASDAQ 100 is a little over 100. Well, the dollar index is really 6 different currencies against the dollar, how those other countries are comparing. It's the euro, the yen, the pound, the Canadian dollar, the Swedish krona, yeah, for all my Swiss friends out there, svenska med, and then you have the Swiss franc on there. So it's a basket, but as you can tell, it's completely skewed. It is way overweight. It's 57%, I believe, is the euro. And this is kind of like looking at the NASDAQ 100 or the S&P, where you say, okay, I've got 500 stocks, but 25% of the moves are coming from 4 of the companies. It's weighted and skewed. So while it's important to look at the dollar index, it's also critical to understand how weighted and biased it is towards the euro. So if you guys hear really bad news coming out for the euro, that's probably going to do very good for the dollar index. And, Sam, I know you're trading the euro quite a bit. Is this obviously, it's just the exact inverse relationship, right?
It really is. I mean, it's almost like, as you've got, you can see the biggest price weighting that we possibly got. And I got the charts up on here that we can have if you want to use it as a correlation, if you like, as a sign. He's always, without a doubt, going to be using obviously the euro USD versus the USD, the dollar index, because that price weighting. Because you got to remember, before everything went into the single monetary currency, the euro, you had the Deutschmark, you had the French franc. We had the lira and all of that. Now that's all kind of been blended and amalgamated into the euro. That's why it's got that huge rating. And it's like trading a mirror image of one another at the moment. And I found that some currencies do have that, better respect for it. I found it pretty useful with the yen and to some degree the dollar. Look, I would say it like this, as if you're like a case builder, the term I like to use. You would use the dollar index more with the euro USD, more with the pound dollar, Canadian dollar, dollar Canadian and dollar yen. So maybe they're like the big 4 there. So USD JPY, USD CAD, euro dollar and pound dollar, because they have the highest ones. But if you take a look at the charts right now on here that we've got, I'll actually pull up a chart and just show you actually. Sure. If you want me to share some charts, it's just easier on here. I always me, I always love to get my charts in, don't I?
Sure,
and,
share away.
Start bringing some things into it. So let's go share my screen and let's just see if you can pull this up right now. Let me know when you can see my screen, Merlin. You should be seeing my charts of TradeStation right now. Is that coming out for you?
Yep, wonderful. Nice and clear. Perfect.
Yeah, lovely. So, look, for an example, let's just go quickly back to the dollar index on here and just take a look. So if I just go back over to $DXY, which is, and it's a different, ticker on different market, on different platforms and so on. One of the things that we've been looking at, and it's an interesting one. I wanted to share this analysis with the room actually right now. This is someone we've been looking at a lot. And, you've got this pocket here of buying activity that we've been doing. And I want to just see if I can zoom in and show you on this. Yeah, there we go. So let me just zoom in. And, we had this pocket of buying activity here, which is about halfway between the sell-off. But what's been really interesting to me on the dollar is we've never closed below this 93 area. Did you see that last month? We had that. Mm-hmm. Right now, we've got this indecision. And I'm always looking for these little traps, Merlin. I'm always looking for these little subtleties. And while I feel the dollar does have that little bit further of room to go as well, this is definitely a really significant price area, this 94, 93 area. So we were looking at it right now. And for me, I use that as a little signpost, because now if I slide on down to my weekly chart, and what we can do is we can do the same thing, and we can go ahead and we can take a look, and there's a really subtle little pocket right here, which I can go zoom in for you so you can see it right here, for me, which is the last buying opportunity, the last little bump, if you like, on the road. And this is where we've been for the last couple of weeks now, for 2.5 weeks, been finding a ton of buying activity. That's one of those wholesale demand areas, buy zones, whatever the heck you want to call it, depending on what education company you come from, okay? Mm-hmm. But, this is really accumulation zones now. Heck, it's all the same thing, right? At the end of the day, you got this area here where you've got this pocket of buying activity. And, for me, that's like, all right, well, look, as a great signpost, I can say, well, based on that analysis, I should have maybe a more bearish view on the euro, because this would suggest that there's upside potential for the dollar. And what I love about this one is there is nothing to stop this thing to the upside on here. Absolutely nothing. So this key weekly area for me, this is a really significant price point, 92.64, huge price point on there, absolutely massive. Likewise, last month's low at 93. Let's just call it this to be safe, 92.64. If this thing holds, I'm gonna expect to see a push back to the upside, to 96, and then probably up to about 97. This thing needs a bit of a pullback on here. So what does that do for me? Taking over back to our euro dollar. And we can look at our dollar yen as well. If I'm expecting a rally in the dollar, that would mean I'm going to expect some opportunity in the euro USD as well. We can see on here on our euro USD, you know, again, euro USD is getting close to those areas. If this thing over here decides to actually start, you know, loading up for me, let me just refresh this chart, Merlin, and see. There you go, perfect. You know, we had it's uncanny. Look at this. It's like looking at the same chart. That little pocket of demand that we just looked at.
Yep.
Go ahead and see the same little pocket of supply right there. Now look, I mean, it's literally grazed it, but you see again, so we've got two signposts. We've got major price resistance here on the euro dollar USD. We've got major price support on the likes of the dollar index. So for me, that's like, all right, you know, this is an opportunity here where I got to lean a little bit more on the sell side. And for me right now, you know, I've got shorts on this. I'm taking a shot at it. And what I love about Forex is I've been dipping my toe in the water in the trade room, getting a little short on euro dollar, doing the same thing as well on GBPUSD. Let's take a look at this right now. If I can type fast enough for this, there you go. Again, look, great little area that we've got right now on the cable as well, seeing that pressure, just waiting for these lows to break. Again, lines up with the weekly charts, very, very useful. And again, if you go back to the good old USD JPY, that's been on that amazing downward run, and for me, still in that downward run. You know, we still got the descending pattern. Beautiful area. One of my favorites is those daily areas, Merlin, and this is the area that I'm looking at right now that we just clicked for me, which I'd say, you know, is an opportunity I've been waiting for to try and get a short on this thing at the moment. And it's all coming from just having that outlook on the dollar. And the nice thing is, if the dollar does break lower, we're probably going to get stopped out on this, and we can reassess our trading plan that way. But when everything's lining up, it does help to some degree. That's a little kind of way I've been using it in the trade room this week.
Nice, I like it. I wanted to show some relationship.
Oh, I need a breather. Sorry.
Yeah, no, hey, I love it. Go, man. It's always nice when you get on a roll. I just switched over to my screen here, and I'm just showing the viewers. The reason I wanted to show you this is because part of the discussion today is the power of the U.S. dollar and its impact. And one of the major things that I focus on in this program, and I think you probably learn in any kind of economics or finance course, is what the dollar means for markets going forward. And I wanted to bring up these two charts. On the top, I have the dollar index on a weekly, and on the bottom, I have the S&P 500. Now, we could obviously make the argument that all the sheer capital being printed by the Fed and the government is what's pushing this market up, but I would also contend that it's the U.S. dollar. And if you look at this chart here, I'll zoom out just a hair, do 2 clicks, so it's on the exact same time frame. I want it to be exactly the same. Notice that when we started to started to rally at the bottom here, right, those March lows, the dollar index spiked up. And as soon as it started to drop aggressively, that was really the start of this huge rally. And the point I'm trying to make here is if we look at the power of the dollar, if you have to wonder who's the lead dog here? Are the markets the lead dog or is the dollar? I would contend that it's the dollar is the lead dog. The weaker that dollar becomes, the more attractive goods and services are. Well, tourism isn't a big thing right now, but the more that we see the dollar get weaker, a euro may buy more of that same product. So there will be more sales. Commodity prices generally benefit as well. Now, going back to what Sam mentioned, if you're looking at this as it's coming into a demand zone and there's a potential bounce point for this dollar back to the upside, that would mean historically that the equity markets would sell off. Commodities might sell off as well. Interestingly enough, we have gold, who has just been going absolutely gangbusters. You know, gold hitting all-time highs and breaking through some very significant numbers at 2,000. Perfect time for a bull trap pullback. Equity market, same thing. Bull trap pullback, and the dollar's coming in demand. It almost feels like you have this perfect lineup of demand and supply levels on all market assets. What do you think?
Oh, yeah. And we were looking at gold, weren't we, as well? We've got to bring that in because I mean, the classic inverse relationship between the two. Let's just go put that on my chart so I can see it as well. I mean, we got that amazing little pop. And remember, I remember I was saying we've both been bullish on gold for quite some time. But you got to look at 2000 and be like, come on. Do you know what I mean? It's like, yeah. How are people not going to take profit at historical levels like that? And if they don't take it bang on the button, Merlin, they're going to start taking it. And we've seen, so far this month, ouch. I mean, there's been a bit of a slap right there as well. And just looking at this, I mean, for me, it's a very exhaustive move. And I have to say right now, just taking a look at the gold at the moment, if we don't hold these levels where we are right now, if we don't hold this 1900 level, then I do see some more push, at least down to about 1800 on this as well, which lines up beautifully with that dollar index. Now, look, back to your point there, if you actually take a look at gold as well. And while gold has overshot, putting some new highs, by looking at where the dollar was today and over the last couple of weeks, that's been a good little sign that maybe, get ready. Because from profit taking perspective, if you've been long on gold, just seeing where the dollar is at that point, very useful in how to manage your positions in gold. And I always say this with a word of warning to everybody who's listening and watching right now. You have to build your thesis. You have to build your trading idea around the thing that you're trading and use the other markets as, like we call them, odds enhancers, case builders, whatever you want to do. Don't blindly go, oh, well, the dollar's low, I'll buy it, so I'm going to short gold. No, have a plan, but look for other things that support that plan. And for me, I don't trade the US dollar as such. I mean, you can trade futures on it through the ICE exchange, I believe, and so on. But at the end of the day, why trade it? You could trade the euro. It's like trading. It's just the inverse of it, and it's a great case builder for things. So I think a lot of things are lining up. Again, though, we're back to that thing, isn't it, Merlin? I think all of us who've been in this business a while, we're all like, yeah, this thing's gonna go. But man, it's that equity market. Those pullbacks are still vicious, and they're still having it. I mean, that beautiful sell-off late into the close last night. We were looking at it in the trade room, and then it hit those areas, and there's an unfilled gap on the Nasdaq, and it just held that support, and bang, off it went again today. I mean, it's like we say, it's almost like somebody knows what everybody else is thinking, right?
Absolutely. Just to piggyback off Sam's comments, I put up here the dollar index against gold. Gold's at the bottom, dollar index is at the top. And you guys can see that the dollar index hasn't really reacted strongly to that demand zone they identified, but it is basing and going sideways. And it looks to me, especially as of the last 2 days, not really showing too much weakness and making new lows. So if we can hold here, that means the dollar index is probably going to start to have a move back up. And as Sam points out, there really isn't anything major to stop the dollar index to the upside here. Now, if you notice what's happened with gold at the bottom obviously was being pushed even higher by just this collapsing dollar. Well, all of a sudden, a stabilization of the dollar, I think, is part of the reason you saw a correction. Certainly, it was the break above 2,000, the bull trap. Now you've fallen $1,000, you've fallen over $100 in gold in the last 48 hours. I mean, that's a pretty phenomenal move there for gold. If the dollar starts to rally from here, guys, that 1,800 mark that Sam points out as a potential buy point, which I kind of agree with, is probably going to get reached very quickly. And that's, if we get the dollar index back to 95, gold's going to be at 1,800, probably down closer to that 1,750 mark. So that's the gist of it. I'm just looking at this going, man, I just feel like this dollar index is going to pop, and all of a sudden you're going to see things really take a big hit. But the truth is...
And I think it catches you as well, Merlin. Like, this is another, just again, little tip from someone like, this, you've been doing this a long time. When I see those big areas, on the dollar index, like where we are right now, and and they're getting tested. Last week the buyers come in. I think a lot of the time when you've been in this business a while, you expect at the big areas it's just going to turn right at those areas, and gold pretty much did. I mean, it had that. But, a lot of the times I've found, those moves, they're building up. And, a lot of the big players are probably unwinding positions, trying to accumulate at these areas. So, a little tip I'd share with everybody is, when you do have these really key areas, don't always expect that the first time it comes back to that area, it's going to just literally stop and reverse. It's almost like the bigger the area, the longer it's going to take. It's like, a huge lorry coming in and trying to have to do a 3-point turn. It's going to take time. It's not a sports car. It's on a big chart. So, again, I find sometimes the longer it stays at those areas, that accumulation's coming in, and then everyone gets thinking, it's not going to happen. And they say, forget it. And then the next day, what happens? Off it goes. That's why it's so important to just stick to your plan. And, none of us have got any control over what the market's going to do, but we can control what we do with our plan, right? So I'm more along the lines of like, hey, let's sit on this thing and see what happens.
Absolutely. Great. Updates from TradeStation. Let me go and share my screen here. We had a question from Joseph. Says, is UUP a good dollar ETF? There are a few of them out there. UUP is basically just trading the futures contract, so it'll give you a good representation of it. The only issue, and it's not that big of an issue, we'll throw on the volume here, is average volume. Your average is about 1 million shares traded a day. So anytime you are going heavy, if you're trading big share size, this one is probably going to give you some issues with regards to liquidity. But other than that, I have no problem trading Invesco. I would just stay away from the doubles and triple leverage dollar stuff. That just gets a little bit too crazy.
Yes, I really would. I really, really would. I mean, a million, you're probably okay. I mean, like I say, for positions, yeah. I mean, you know, if you've got time to get in and time to get out, I'd agree on that as well. So, but again, I mean, it depends on how you're doing it. You know, there's plenty of other ways to engage in the dollar, like we said, with the euro and some of the other currencies too. But yeah, I mean, again, that would be the bare minimum daily volume I'd be wanting to do anything on, really, and treat that more as like a position trade than, you know, than a day trade. You don't want to be day trading that. Let's put it that way.
Right. Good question here from Joseph. He says, does the GBPUSD consolidation in the supply zone worry you? So I'll bring up a chart here, and there's your British pound GBPUSD. You guys can see that big rally that it's been having, looking really nice, and all of a sudden, you know, you've got this 2 weeks worth of just kind of choppy sideways candles. And of course, you know, you make the argument that it's up in that supply zone. Well, it's kind of drifting out of it now from my perspective, but yeah, we went up into it. Do you ever look at this, Sam, and say, it stayed up there too long? Like, if it was really a strong supply zone and there was, in fact, institutional selling, we should have seen a bigger move down, or is it just, it's all the same to you, or is there any kind of a weighting that you like to look at?
I think that's just such an awesome question. So I'm really glad that was asked, and something I could probably talk about for a long, long time. I mean, I can talk, I know, but, you know, it is a great question. And, yeah, I've had this a long time, like, how long is it going to take? Let's just strip it down, you know. One of the things that Dan, who was on the show, and I really kind of preach, and is that I feel like sometimes in the educational world of trading and investing, there's this idolized view of how everything should be, right? It should be this, and your stop should go here, and there is this entry, this, and you know what? You do this long enough and you realize, you know, idealized, it's not. There's a lot of BS that goes with it that you have to deal with. There's a lot of other realities with it too, and you know, for me, it's been hard enough sometimes. It's hard enough to nail the entries, let alone then say, well, how long is it going to take for it to work, right? Who knows? Like I said, market can only go up, market can only go down. I've never let it bother me. I've kept track records over things. I've journaled my performance and the things I've done over the years. And let me tell you this. Every time I've really expected the market to do something, it never did it, really. You know?
Yep.
So I started taking my opinion out of it and getting to this point of, you know what, it'll do what it's going to do in the time it's going to do it. I mean, you know, you're going to see it constantly. So I think it's that thing of we feel like we have to babysit these things and come on. And us human beings, we're really not very patient creatures. We're really not. We want it now. We want it. Guys, there's no idealized view of it as well. Someone else can go, oh, it's spending too much time there. That's because it's not working. It's because all the supply's being eaten through. Well, my response to that would be, okay, prove it.
Yeah.
Have you got like a bat phone to, like, you know, Buffett? Have you got a bat phone to SAC? So all of these guys, who knows? Who knows what it's doing? It's in a key area. There could be a position where they're just unwinding, and then bang, the move's going to happen. I think the thing that makes this such a magical business is no one ever really knows. And all you really know is you just got to pick your spots and go by it. So, would I like, in an ideal world, I want to say hit my areas and go straight into profit. But I also know that a lot of the times my best trades don't do that. They take time because we're trying to buy and sell in highly competitive areas, and there's going to be competition to get in and get out of positions. So sometimes it actually makes me feel better about it because I'm like, all right, maybe this is significant. And if I'm wrong on it, I'll be wrong. But man, if I'm right, this is going to be the move I was waiting for.
Yeah, and to me, I like to grade them. I'm actually going to do some fantastic artwork for the viewers out at home. And what we've got here is, let's just say you've got your supply zone mapped out and you think it's real strong, okay? That's those two horizontal red lines. You can call it your supply zone, resistance, accumulation, whatever, or distribution, whatever you want to call it. To me, there's a story told by how price moves. It's the behavioral analysis of the people who are trading. And if I felt that this level is really strong at this point, I would expect it to move out like this. Oops. You know, something rather aggressive. If it was a really strong supply level. If, in fact, it just did this, kind of maybe a slow drift down, I'm not as confident in it. If it stays here and just chops through sideways, those are three. You got 1, 2, and 3 possible reactions to that supply level, right? Obviously, we're anticipating number 1. That's why we're setting up supply zones and why we're going through all the qualifiers to make sure it's the right zone. Number 2, it's drifting down, so yeah, it worked, but not really strong. And then number 3, basically like, no one's giving a crap about selling. They're just holding it right there at those highs. To me, number 3 is about to break up to the upside and keep on moving higher. That's called a high tight flag. What we're seeing right now in the British pound is number 2, where you have this market that's just kind of slowly drifting down. Let me take that off there. You have this market that's just slowly drifting down. Nothing really that crazy with regards to selling off out of that supply. So I'm not that excited about it, honestly. Like, I honestly, at this point, I'd go, I don't know which way to go here, long or short.
Yeah.
The weekly trend.
And that's great. And I feel the same way sometimes. It's just like, right now it's not giving that. And I don't think we're getting that from all of the currency and stuff. And I think that what's just worked for me is not question. And so, well, look, if someone put a gun against my head right now and said to me, you have to take a trade based on pure value and pure price, my rules tell me I got to be a seller. Yeah. And that's the way I look at it. Yep. But yeah, I mean, I tell you what I haven't been doing with these positions, and I've been holding positions in this, is I'm not carrying them into the weekend. Because they're not meeting my criteria of coming out. So I've had a couple of extra entries, Merlin, off of it to try and get some things. And that, like, we had a move on the dollar CAD last week where we got long. It hit a nice 150 pip move, then it just stalled. It's come all the way back down again. We didn't take it over the weekend. So I think rules help you with that. But again, maybe the market's making up its mind at this point. Maybe the bigger players are saying, hey, it could go light, it could go higher, could go lower. I don't know. Maybe something will happen tomorrow and then everyone will dump the pound or buy the dollar. I don't know. I always want the ideal, scenario. It's not. But, again, go back to that thing. If you had to do something, your strategy should at least tell you what you should do. What does it make sense to do? Be a buyer or a seller? And for me, where it makes sense to be a seller on it right now. So,
and if we take a step back and look at the macros and fundamentals on why this is happening, guys, you have to understand, for those of you who saw my thing, the Monday Market Must-Knows, I identified this as being one of the keys for this week, and it's probably going to be next week, will be what is the new bailout package, right? What's the new stimulus going to be? And conveniently, as soon as those discussions started, and you're hearing about gridlock on both parties, whichever side you're on, I don't really care, but they just won't agree because they hate each other just because one has a D and one has an R. That's politics. Right. I think they all would agree that they want America to do well, but let's just disagree just because we want to represent our parties. As soon as that gridlock happened, that's when you started seeing the sideways action in most of the USD currencies. Because the question is the stimulus. If we get a lot more stimulus, then you're talking the fire of the printing presses again. That's going to create a weaker dollar, which would mean that the British pound is going to be moving the upside. Same thing with the euro, and those supply levels might be violated on that euro USD, and the demand zones on the Dixie. So right now, it's a little bit cautious, and it's all about the dollar. That's how powerful this currency is. And I know that we've got a few people like Brendan, who's one of our regulars. He's like, the dollar sucks. Fiat currency sucks. I agree with you. I think the dollar is, the way it's manipulated, is an absolute joke. But there's nothing I can do about it. I have to just go by what the market gives me and make trades accordingly.
Yeah, absolutely. And I mean, I'd say I'd extend the same thing right now. I think the NASDAQ sucks. I think that all the stocks are overpriced way beyond like any comprehension. I think the market's overpriced, but you know what? There's still opportunity on it, and so I think that's why, from a world of Forex, you just got to pay attention to what people are paying attention to in that respect, because it isn't the greatest currency, but in this fiat world of paper money, what is? That's the question again, and that's where we then bring up the crypto, future and blockchain and where that's all going. But for now, it is what it is, and we'll just deal with it accordingly. And at the end of the day, if the dollar dries up, I've had this over the years of teaching Forex. People have said to me, Sam, what if the dollar does go away? What's going to happen? I'm going, well, all the trading volume will go to the next thing. So you'll just move your trading over to that. I mean, it's not going to, it's like what happened when the Deutsche Mark went away and when the French franc went away. Guess what? The trading went into what? The euro, which is the most heavily traded currency in the world against the dollar now. So yeah, just work with what you've got to work with until then. And, we'll see what happens. As long as there's opportunity, we don't really care, do we? So.
No, not at all. There'll always be opportunity out there, so it's just a matter of watching and understanding what happens. And right now, guys, until we'll see, maybe it'll happen this week, when that announcement does come out, you're going to see this silence, which has been on most of these currency pairs, like the British pound, Canadian dollar, Australian dollar, which has been kind of choppy. You'll see all of a sudden a real sense of direction as they make that announcement. All right, let's see, I had a question. Let's see, Fink, since he just sent this one in, I'll go to it. Fink says, if you look at the weekly zone on the Dixie in 4 hours, you would say it's basing too long? So let me go bring that up here. I'll bring up the DXY. It's funny. That might be another conversation piece there too, is who thinks something bases too long. I personally don't think something can base too long. I know a lot of people do, but let me bring up the $DXY, and you go to the weeklies. What you want to look at? I think you said 4 hours. A weekly zone in 4 hours, you would say it's basing too long. If you look at that weekly zone, I see what you're saying. So go to the weekly, break that down. You're talking way back there, so I don't know if it'll take me time to get that zone all the way back in a 4 hour time frame. How long if you go back? I got to go back over a year, 2 years. Yeah, we could do that. Let me just do it here. All right, fine. So we'll go a 240-minute chart. It's gonna be
things you do for your viewers,
the things you do, especially live. It's one thing to do it for the viewers, but it's live, and I got to go back, and it'll take me a while. So let's go back.
We're going back to what? Mid 2018, right?
700 days. Let's see how long it takes to load up this data. This should take a while. Oh yeah, it's gonna take me a long time to load up the data here. Even with fiber, I don't know what's going on with my damn internet connection. Anyway, while this loads up, yes, Abby, you're right. We simply trade the charts. Exactly. I think it's much easier. Although I think to my comment about, the stimulus and the announcements being made, be careful. What I would recommend is if you know an announcement that's that jarring to the U.S. dollar, then you might want to scale back and cut your risk exposure so that you don't get burned. All right, let me see. I had the. Scroll way back here.
While you're doing that, Merlin, that's a really good point. Just while you're getting that chart as well, one of the concepts we do as well, and Dan does a lot as well. Is like with the options and with this, like I'm just going in real small on the currency right now. Like I'm not going in with anything crazy. Just small bits of the account. Putting it across. I never have usually more than about 4 or 5 currency pairs trades open at a time, and just doing small amount, just dipping the toe in the water. Like options on some of these things, just going into it, throwing a few positions out there on a few contracts. That's great. And then when the move picks up, especially if you're going for longer term targets, you can always build a position, right? So you just don't go in these stages here. You want to get loaded up a little bit in case the move happens. But if it doesn't, you don't get slapped too hard either. So you can always do that. And that's something we've been doing a lot lately.
There's your weekly going back into May of 2000 and I think it's this 18 I'm on now. Man, going way back. I mean, there's a couple different spots we could draw this in, but you can see. I'll carry these 4 lines forward and see where we stand now. There's kind of 2 smaller little zones. I like the 92.24 mark, and I'll scroll forward to where we are right now on that 4 hour. We've hit those zones multiple times. The first one was absolutely gorgeous, guys. You see this first hit down to the demand zone from that years ago. So there still is that lower level, which is between 92.34 and 92.24. But I don't know. I challenge if we will get there. I think what you'll see is a stimulus number come out, and I don't know. I don't think it's gonna be too heavy of a number. The employment numbers are coming back. The economy's getting a little bit back on track. So I don't think there's gonna be too much aggression. Although these guys probably want to get voted back into office, so they'll go out of their way to make a big stimulus, I'm sure.
Absolutely. And on that subject, I know you mentioned about the levels being tested a few times. Yep. One of the things I think people also it's different. It's a different market, the forex market to the currency market. To the equity market. Excuse me. I mean, of course, price action is price action, and strategies can be general across the thing. But when it comes to tested levels, in my experience, I've seen way more tested zones. In forex than I have in the equities, because it's the nature of the business. I mean, you take a pairing, dollar CAD, okay, Aussie USD, CAD yen. With all due respect, one's not going to go to zero against the other at any time soon. So you naturally do get more fluctuation on those longer term time frames. So that's why I like to rely on those bigger time frames a lot to make my decisions in forex, because a lot of those previously tested areas actually become really good turning points as well. Just something to remember. It's not like an equity that's just being valued on its own. It's always 2 things in one, right? That's the nature of it.
All right, I'm going to switch topics here very briefly, just because I want to get to this one listener question that came through, and I thought maybe Sam would offer some insights into it. This is from Walter. He says, can you address how future minis and micro pricings correlate? Do micros mirror minis regardless of their own supply zones and demand zones? I'm asking because I want to trade micros, but only look at the minis for analysis and deciding where to enter and exit trades, and ignore micro zones, but I don't know if this will work. So if someone were to start trading the micros, would basing your levels off of the minis be the right thing to do?
I have been doing exactly that. I've been doing it in classes that I taught with OTA, and now in my guided trade sessions, exactly, because I built the curriculum there around micros, because it's so I love the micros. I think that finally the futures market's become really accessible for everybody, you know, and you can go in at such a small risk now, and it's just wonderful. So I built the curriculum around micros. So we've just been trading those in the room and then the great thing is you can build all the way up to, like, you know, however many contracts in the E-minis. So what I found the initial issue was, and this is going back probably 6-7 months ago now, was getting the data. So if you chart the micro contract, you're only going to be able to go back on the charts to the data of that micro contract, and there isn't enough data because they're so young. So what I've been doing is looking at it and saying, well, instead of doing like the chart of the micro NQ, just doing the regular NQ chart with the micro, and you know the prices are there, they're like within a tick. I mean, it's like for like. So the answer to it is, yeah, what all I do on my charts is literally chart the regular E-mini contracts, and on the execution dome or whatever it is you're going to use, execute on the micro, and you're good as gold. Otherwise, you're just not going to have the data to be able to go back. And if that's the kind of trader you are, I mean, if you're not into all of that and you're just, you know, indicator following trends, momentum trader, that stuff's not going to matter to you. Well, it should, but you know, it might not. But the point is if you really like that historical stuff, which I personally do, you'll be fine by using the E-mini charts.
Yep, I agree. I say that's how you should be doing, is looking at the mini charts. And I mean, like you said, the levels are going to be pretty much lockstep. You're never going to get a big separation for a couple things. I believe it's actually supposed to be pegged directly to the minis, and if it isn't, there will always be algos that are going to do arbitrage. If there's ever a separation, that will be fixed right away because of computers and algos out there. So plot it off the E-minis. You're good to go. I think it'll be fine. Sam, what's new in your world? I know that you were doing your maiden voyage. You got your things up and going over there at Stockability. Any news you want to share before we wrap up?
Yeah, how's it going? I'm tired. I'm exhausted. I'm happy though. You know, I'm the happiest I've been in my career, which is good. You know, got pushing 100 students in the room right now. We went with the public web. The website went out on the weekend, so people have like been perusing that and everything, which is good. All the back end of it, all the on-demand content's all there as well. We've got actually our, Wednesday today, right? So yeah, a week tomorrow, which is August 20th. We've got like our first webinar we're going to be doing, showing people around. So people have been registering for the webinar, going to the website stockability.com and registering for our webinar to work with Dan and I. Just keeping the webinar short, an hour and 15, hour and a half, nothing too crazy, and showing them a little bit around what we do. But I mean, it's been good. It's interesting now. This whole thing's just blown up, and everybody's got opinions on stuff as well. So now everyone's like, oh, so that's what your tuitions are and stuff and all that. So it's cool. But I will say this, you know, one of the things we did do, and I'm not going to get into it. If people are interested in going and looking, please do. It's all there as well. There's a lot of choice out there. But one of the things that we're really excited, Merlin, that we did as well was we built the programs very much specifically, because one of the things I love the OTA model of education. I really do, with having the classes and the online XLTs and the tools and resources. So we've got a very similar structure in that, but a lot of our work's been going into our live coaching community, which we're doing, and it's literally like we're on that, all chatting to each other all day, push notifications. It's been a great learning tool to have on that as well. So it's been good. It's been busy and just taking care of our founding friends, as we call them, but onwards and upwards. So I think if anyone is still interested in it, you know, you can follow us on at stock_ability.com. I know you'll share it for us, Merlin. Yep. Stockability.com is the best place to go to the website, and there's a link at the bottom if you want to come to one of our webinars and meet Dan and myself, and we'll talk a little bit about what we feel makes us different in our curriculum and our execution as well. So yeah, that's where we're at.
Awesome. Well, thank you. I got one last question. Abby sent it in right away. Do you trade future spreads?
Yeah, I don't. I don't. Here's the thing. I have a relationship with future spreads. Right? So it's like kind of one of those things, like, I love them. I think they're really, really cool. And I actually wrote a course about them a long time ago that I'm thinking of rolling out in the future with Stockability. I never found a good solid platform I felt comfortable executing them on, which is one. But I think, you know, I can do what I need to do with Think or Swim. The second thing was they're very seasonal, Abby. So I'm not into them unless, you know, the right seasonals are there. And I wouldn't really suggest using them unless you're using fundamental analysis. And I will say this, that is the only real fundamental analysis to me that counts, is in that seasonality, because you can't get away with from Mother Earth and the power that she has. So yes is the answer to it. They're a very cool tool. It's something we're bringing into the curriculum at some time. They're great. It's a little bit of a dark art. I mean, there's nothing dark about it, but there's whispers of it, but no one really gets it. And it's a pretty cool thing. It's a pretty cool thing, but the conditions have to be right, and it's all seasonal based and fundamental based.
It's definitely not mainstream. Abby, I do not. There's plenty of other things out there for me to trade. At some point, I probably will dabble in it. I have some friends that are trading spreads on futures, and it's not something that I have done. So I claim ignorance.
I think I'd rather just do the option stuff. You know, the way that we try to teach our options is very, very low risk on what we do. The liquidity's there. You can do it all the time. I just think that's why it's not there. So the students have been asking about it, and I'll go through it. But I think there's easier ways to slice the bread. So hence not really kind of doing it that much in the mainstream.
Bob Bainey. All right. Well, Sam, thank you so much for joining us. I hope that the remainder of your week goes less stressful. Sounds like you're exhausted for working so hard. This is the perils of starting your own gig, man. You knew it was going to be a lot of work.
Oh, I knew, and I don't regret it. And it doesn't. And listen, the thing is, it doesn't interfere with anything. You know, people are like, well, you know, if you can trade, why would you bother doing it? And I'm like, well, clearly you've never just traded then.
Yeah, you know, I can still trade.
Yeah, you do, and it's really rewarding, and the results. I mean, some of the results the students are getting has just been so great, and it makes you feel like it's all worthwhile. And yeah, you know, I'm very, very happy. So tired but happy. You know, satisfied, happy. It's like going to the gym. You feel good after the workout, even though you're tired. So no complaints.
Awesome. All right, my friend. Well, thank you. Look forward to having you or Dan back on the program again soon, man. Take care.
Yeah, I'll bring him on with me next time, and we'll do another one of our three-way
the trios
sessions. Sounds good. All right, awesome. Thanks for everybody. Thanks,
Sam. Take care.
Bye, guys.
Guys, that was Sam Evans of Stockability.com talking about the U.S. dollar. I showed you this earlier, guys. Someone was asking, is this Bitcoin profits? I feel like just to be a successful YouTuber, I just have to flash money around and pretend how cool I am. I thought it would be really kind of funny to make a video and have, like, anybody got a kid who's like 5 years old or 8 years old, and we could just have him read a little script, and the script's like, hi, I'm Timmy. I took my lunch money and turned it into $8.7 million on one trade. Like all the other commercials I see on YouTube, all these morons, that most of the people, I'm willing to bet you if I put them in a room and said, do you actually trade? They didn't know squat about the markets. So no, this is not Bitcoin profits. But what's interesting for those that know me is this will actually be going into Bitcoin. The trick is finding the way to do it so that the uncle say, we won't say anything like that. But yes, this will be finding its way into Bitcoin to further bolster my position, although I feel like I'm kind of chasing Bitcoin at this point. If you want to know more about Stockability, I put the page up there. You guys can simply go to Stockability.com. They got more information on their front page now. It used to just be a blank page. Now you can get more info on their education, their programs, whatever, and even get more consultation from it. So hope that helps. Let's go to your economic calendar for mañana. And I want to do two things. Number one is the economic calendar for tomorrow, but also what happened today. There was some earnings. Cisco reported earnings, and most of it's been good earnings out there. I think I have them out of order. Did I put them out of order today? I may have put them out of order. This is for today, so the date is correct. Okay. Just making sure I got my numbers right. This is the numbers that happened today, and we mentioned this on yesterday's program that the producer price index was much higher than expected, and you can also see that here with consumer price index today coming out much higher than expected, to the same percentage though as PPI. So that's good. I mean, it's a sign of growth. It's a sign of prices rising. For those of you who have been out shopping, you may have noticed this much more aggressively with regards to pricing. One of my favorite restaurants here in Southern California just recently opened back up, and I was all excited, so I decided I'm gonna go there. I went there last night, and one of my favorite meals of this place, it was the best deal in town, it's the ribeye steak. Ribeye steak comes with a mushroom mix of like 5 different mushrooms and red wine reduction sauce and some collard and some mashed potatoes and stuff. It's great, but it's $27. Honestly, a great ribeye by itself at Ruth Chris is going to be costing you like $50. So this was an amazing deal. I went there last night, and of course, I expected a little bit of a bump at prices. It went from $27 to $35. That's an $8 increase. That's over a 25%, or around 25% increase in price for the same meal, and the portions were way smaller. Cocktails were just as strong, but all of a sudden I found myself going, God, inflation? I feel like I'm hitting it all over the place. Same thing I mentioned about McDonald's and In-N-Out and the Habit. Those prices have all been rising as well. So we'll see if these inflationary numbers that we're starting to see on CPI and PPI continue to move on even further. Yes, Joseph, I eat at McDonald's every now and again. When I'm really feeling like just depressed, it's like I go and get chicken nuggets. I don't know. It's an old habit, but I got to have the hot mustard sauce. All right, so that's really all that was important for today. Of course, you do have some announcements coming out later on tonight for Australia, such as their unemployment rate. For tomorrow, I already even put a box. For tomorrow, your economic calendar focuses on the U.S. You can see we've got unemployment claims, which are expecting to slightly drop. You have import and natural gas storage numbers, NG, keep an eye on that one. And then for the earnings calendar, you're seeing Applied Materials, Baidu are the major names, and that's pretty much it. Not a lot of other stuff out there that's really that noteworthy on the earnings calendar front. So I will leave you with that. Again, want to thank you guys for joining us today. If you have questions or anything for Sam, I think it was info@stockability.com or SAME@stockability.com. If you wanted to email him and get more information on Stockability, you can also visit their website. If you have questions for me, I'm always happy to field those questions as well. So feel free to send them on in. You can do that by going to TraderMerlin.com, as I like to show the flames here because it's on fire. Or you can go and just put them down below the video on our YouTube channel. As you guys know, that's usually where I'm pulling most of the questions from. So send them on in there. Of course, if you like today's show, give me a thumbs up. I do appreciate that as well. So thank you guys so much. Let's see, today's Wednesday. Thursday, John Rowland. We're talking covered calls tomorrow, which is interesting because John is my natural gas and oil expert, right? And he goes, I want to talk about covered calls. It's like, whatever you want to talk about, brother, I'm happy to talk about it. John Rowland will be our guest tomorrow talking about covered calls, and I'm sure we'll dabble a little bit on metals and what other markets you want. So send in comments, questions, suggestions. We'll get to all that. Jerry says, Merlin, I'm skeptical on Bitcoin, but you seem to be optimistic on it. I'll talk about the numbers one day. Yes, you know what? I didn't see my calendar yet. I know I have a guest Monday, Tuesday. If I don't have a guest Wednesday or Thursday, I will do a number why Bitcoin will be $100,000 by the end. I'm gonna bump my year 2022. Which is a year and a half away. Bitcoin will be $100,000 a coin. I don't know if I'm going to bet a bottle of Blanton's on that one. It's a pretty lofty goal, but we'll do my best. All right, everybody, thanks so much. That will do it for me today. Hope you enjoyed today's show with Sam Evans. Again, give us a little thumbs up, and I will see you all tomorrow. Take care.